Hello again, and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for joining. Thank you for watching. Thank you for all the support and all the feedback and great questions. I really appreciate it. Nothing in this video is intended to be investing advice. I'm not a financial advisor, and this is not financial advice. Please always do your own due diligence and always take responsibility for your own investing decisions. Let's go ahead and jump right into the daily scoreboard here with another exciting day in the uranium market. Really interesting price action happening here. So the spot price of uranium, $43 mid-market per pound, reflecting Friday's afternoon's precipitous decline over $4 a pound. This is a 10% drop in a single day, hence the bloody day in the equities and pretty much what happened there, which was thoroughly described to Uranium Insider Pro members in the weekly watch list update that I put out every Sunday evening for members. We're going over all the charts that we follow of the stocks that we own and recommend, and discussing some of what happened in the market in the previous week in a more thorough, in-depth way. The spot price is falling on very low volumes, essentially. So it moved up to that $52 a pound from $32 a pound over the course of 4 weeks on huge trading volume, primarily due to Sprott's uranium trust. And now it's falling on very light volume. So if you know why it's falling and you know what is causing it, then you don't need to panic. And I think that the market is getting smart today because the stocks are all up as uranium's down another couple dollars a pound today. For the second day in a row, Sprott Physical Uranium Trust, also known as SPUT, did not issue shares, any new shares, and did not buy any uranium. So that's 2 days in a row. However, they are now trading at a premium to NAV currently during the trading hours today. We believe that they're heavy in issuing shares, and they're likely raising a good chunk of cash to buy more uranium. If not today, probably in the coming days. SPUT closed on Friday at a 2.9% discount to NAV. And since August 17th, they've raised $433 million for the purchase of 10.3 million pounds of uranium. Just absolutely huge. They have 7.8 million in cash going into the day. Let's look at the ATFs really quick. So URA reported 100,000 shares of new issuance. Now remember, URA has a 2 to 3 day lag time in reporting their share issuance or share redemptions. So the price action that you see in the markets related to volumes coming in or out of the ETFs is not quite real time, but it's not delayed as much as the share reporting. So I think that there's probably close to a 24-hour lag time or less for the ETF. So if you see big selling one day, oftentimes a lot of the selling that they have to do for the underlying holdings happens the same day and maybe trickles into the next day, but the reporting takes longer. But either way, URA reported 100,000 shares of new issuance, URNM no change. However, the AUMs of these two ETFs fell really sharp on Friday, 4.3% for URA, 5.8% drop for URNM. The total AUM for these two ETFs combined 1.55 billion, and month to date they have brought in over $400 million into the ETFs just this month. So let's take a look at the charts really quick and the daily trading action, which is very curious. Let's start off with the Sprott Physical Uranium Trust, U.UN, the Canadian dollar trust for Sprott, traded on the TSX. Nice volume coming into this today, a good update. And as I mentioned, the spot price has dropped another couple of dollars today. So SPUT is now trading at a premium to NAV, and they're very likely a good chunk of this trading volume today will be them issuing shares into the market. Let's take a look at the ETFs really quick. URA up nicely, kind of bouncing back from what looked to be a follow through of selling after a head and shoulders type pattern here in the chart. It looked like a pretty ugly drop, obviously, on decent volume on Friday. But today, very, very nice trading action there. URNM, similar, holding up a little bit better than URA. How about Cameco here? Cameco, nice recovery. Didn't even make it down to the 50-day on the sell-off. So looks like, as things were pretty overbought here going into about 10 days ago, nice healthy correction here. And in my opinion, this is a really, really good sign for the charts, looking very positive. So I want to mention that I'm not going to be doing a uranium market minute tomorrow or Wednesday. So I'll be back on Thursday, the 30th of the month. Today's Monday, September 27th. So I'm not going to do a mailbag question today, but I do want to speak really briefly about investor psychology. So one thing that I've noticed is that I'm not going to name any names, but I know a couple of folks just kind of through Twitter who have unsuccessfully traded around this market. And it's very interesting to watch their psychology play out in their commentary on Twitter and their disbelief in this bull market because of an error in their judgment around around trying to trade around a perceived catalyst. So whether you were trading around the Section 232 petition that was a little over 2 years ago, the market was getting really frothy in expectation of a certain outcome that didn't play out, at least on the timeline that was expected. I know a lot of traders lost some money on that. That we just held through and added on weakness as we've been doing for years. But it's really difficult and important, in my opinion, to take an honest assessment of anytime you have a good gain in a stock in a trade or a really painful loss, is to really take an assessment of what happened and look at it honestly and try to remove as much emotion as possible from that success or failure. And it pains me to see people misinformed about what's happening in the uranium market right now, and to know that that's coming from flawed psychology around a painful experience of losing money. And I understand. I mean, everybody's been there, right? Everybody who's invested before. I mean, there's been times where I screwed up a trade, and I couldn't even look at that ticker. I couldn't even look at the stock for months, even though I knew that I wanted to get back in it, or that I had a good long-term outlook for the stock. I'm not talking about uranium necessarily. This is years ago, just swing trading, momentum trading. But it can be an emotional roller coaster. And if you're coming out an investment like uranium, you really have to be patient with yourself. You have to expect high volatility. And if you're trying to trade around this and it hasn't worked in the past, that doesn't mean that the overall thesis is flawed. That just means that your expectations of a catalyst didn't play out in the way that you expected them to. And perhaps you didn't get the right entry, and perhaps you exited for the wrong reason. And that's okay. And we've all done it. I mean, you have to have these experiences in order to have big wins in investing. You have to have those failures. And this is one reason why we don't swing trade these stocks in this particular sector, because the moves are so violent and sometimes unexpected. I mean, look at today. My portfolio is up 6% portfolio wide for uranium and precious metals. Precious metals are flat-ish, which is kind of a nice change. But uranium's up. Some of my stocks are up between 5 and 10% today, and the spot price is down $2. And honestly, I expected the spot price to keep falling, and probably will keep falling for the next couple of days, unless spot comes in heavy. And maybe they will. Maybe they'll wait till the month end. I don't really know. But you just don't know when these things are going to move in the way that they move, and it's always more volatile than you expect. So trade around these at your own risk. Doubt the bull thesis at your own risk. The financial players are here. They're not going anywhere. They're not about to leave after working on this deal for over 3 years and now taking in hundreds of millions of dollars of investor money into the trust for the purpose of buying physical uranium. This is not going away anytime soon. And if you think that it is, then you're missing the big picture. And you just have to look at fund flow. You have to look at trading volume, and you have to put yourself in the shoes of somebody who has worked through a difficult number of years trying to make this happen, has finally made it happen. And we're in the first stages of that happening. So take your expectations and timeframes and throw them out the window. Take your spot price forecast and throw them out the window. We don't know how this is going to go, but we do know that it's going up. And that's all that you really need to know, because the spot market is thin and then the financial players are here. So with all of that said, just try to be kind to yourself when it comes to investing psychology and emotions around trading. This is not easy. If it was easy, it's simple, but it's not easy, right? If it was that easy, then everybody would be doing it and everybody would be killing it. And it's just not. It takes time. It takes patience. So try to look at your past failures and successes. I mean, in life in general, right? But especially with investing, and try to pull the emotion out of that experience and be really analytical about it. What did you do right when you made a lot of money? What did you do wrong when you lost a lot of money? That's the only way you can really move forward with it. And I'm telling you, the fundamental setup here is still incredibly strong. And if you think the spot price falling from 52 to 43 in less than a week is reason to believe that this market is over, you're just not understanding why that spot price is falling, and you're not understanding the importance of fund flow and the importance of financial players cornering this market. So with all of that said, just reiterating, I won't be doing a market minute tomorrow or Wednesday. I'll be back Thursday, the 30th. And if you're interested in our newsletter, we can send you out a sample from a previous month. Send us an email, support@uraniuminsider.com. Again, like this video, subscribe to the channel, reach out on Twitter, at Uranium Insider on Twitter. There's a great investing community there if you're not already on Twitter. And thank you so much for watching. Thanks for all the support in this channel. Have a great next couple of days. Cheers.